Good morning, Jags. This is Fahad. Today is Tuesday, November 3rd. Let's get started. Lots of different stocks to discuss this morning, so I'm going to fly through a lot of them and pack in with a lot of information. So let's start off with this industrial automation and machinery company called AIMC, or the company's name is Ultra Industrial Motion, symbol AIMC. Um, a fabulous quarter was reported by this company 2 weeks ago on October 23rd, and the stock spiked sharply and broke out from this very important critical congestion level. That day, the stock was up 11% when the earnings came out. And then following that, because the market was starting to get beaten up, this thing consolidated in a tight bull flag. It held up very nicely and continues to grind with very heavy volume accumulation for the past 2 weeks. And then yesterday, after the manufacturing PMIs improved across the board and we saw a lot of the industrial stocks retire, which goes along with my Buy America and Build America theme, this stock was very nicely running higher yesterday and starting to break out from this bull flag. This $45 is the bull flag breakout level. I expect this stock to clear that today because in pre-market, once again, we are seeing pretty strong rally shaping up in the industrial sector. So XLI is going to be strong once again today. Here's XLI. Yesterday, this was running sharply. Caterpillar is going to be higher once again today. Honeywell is going to be higher today again. United Rental is going to be higher once again today. So focus on what's working. And so I wanted to bring up this AIMC. Now, a couple things real quick. When the company reported this earnings on October 23rd, this was a fabulous quarter, and particularly I like the story about the Class A China truck market that is improving sharply. The company reported third quarter results with EPS coming in at 87 cents, significantly better than 46 cents street estimate. So nearly 100% above where the consensus was expecting. The quarterly revenues of $438 million were still down on a year-over-year basis by about only 1.2%, but they materially beat the consensus estimate of 394 million and also showed a significant sequential improvement from what was double-digit decline from the prior quarter. Margins held up very, very strong. There is a margin story over here that I would like to show. This comes from BMO Capital that tells a big story. So if you look at the BMO Capital file, you will see right over here. This is the annual adjusted EBITDA and margins. Take a look at this trajectory. And for the last 2 years now, these margins have held up very strong, and the company in its earnings report maintained the case that these margins will continue to be this way for at least next 2 years, which means profitability for this company remains very strong, hence why the EPS beat was so much higher, 100% above the consensus view. Now, looking at the earnings call that the company presented, there's a comment that catches my attention. This is a straight from the earnings report, and in this case, the analyst from KeyBank asked, "It seems like China trucks is going to be strong. North America, Europe truck getting better, and it seems like you're kind of building that momentum across a number of end markets." And the CEO went on to say, "Yes, well, we think that China truck market will remain strong in the fourth quarter." So there's a clue over here that they believe that this momentum will continue. Going along with that thought, here's an article that came out from Routers, and this was back on August, and that should have been a clue back then, in which they talked about the trucks and excavators to help push China's diesel demand to a new record high. China's diesel demand is likely to hit a record this year, powered by trucking activity as Beijing's aggressive stimulus fuels a construction and delivery boom and a speedy recovery in heavy machinery and sales. And then it just continues to go to talk about exactly what are the policy measures that Beijing has announced, which is causing this massive spike in order growth for heavy machinery and all of this. Here's a chart that talks about this. This is the China's Class A truck surge in March, and they continue to be led strongly by heavy and light vehicles. You can see that the total growth rate basically has now surpassed the pre-COVID levels in China. So this Reuters article and this comment that came out from the CEO directly from the earnings call on October 23rd basically confirms what our view is about this stock. And we believe that this stock is going to continue to break out. BMO Capital was raising earnings estimates on this one, as well as raising the price target all the way to $55 per share. The stock is at 45. I expect higher highs and higher lows to continue. Staying on this topic, I would like to point out one thing, that the read-through from AIMC is very, very positive for another industrial stock, which we are researching currently, and I plan to come back to it with more details. And that is Rockwell Automation, symbol ROK. A fabulous looking chart. After 4 months of consolidation, it broke out in the month of September, just when we started to see value stocks outperform against growth stocks. Then it consolidated in the past couple of weeks in a tight bull flag. And yesterday, as machinery stocks were ripping higher, ROK, or Rockwell Automation, started to break out once again. Currently at 245, I think this is heading to 265 to $270 per share. Earnings have time. The earnings come out by November 10th. On November 10th, before market opens. So my plan here is to come back to this name, and I'll provide you more color, particularly related to channel checks, because this company serves pretty much the same end markets as AIMC, as well as Caterpillar and Honeywell, and all of those companies serve. So I'll be looking out for this one. And lastly, I do want to cover a name that is a top pick from the Jaguar third quarter outlook, which is Louisiana Pacific, symbol LPX. Now, many of the Jag clients made an absolute killing on this name during this period from late July all the way up until early August or mid-August, because the stock had a sharp rally of nearly 30 to 35% during this time. As a reminder, if you go to the Jaguar third quarter outlook, which you can download for free right from the homepage, here is the bull case that was presented for LPX. If you go into this one, and if you do a Control F search for Smartside right over here, Chronicle presented a big bull case for Smartside, talking about that this is a significant driver of growth going forward from here. Basically, this is engineered wood design that the company continues to sell, into all the end markets. A big discussion was presented over here. I bring this up because this morning the company is posting earnings which are very, very strong, and the stock is guided higher by about 3.5%, is going to open at $31 per share. And what's going to happen is most likely is going to clear through all of this resistance, downtrending resistance that has been in place for the past 2 to 3 months. So expect this to clear $31 resistance and potentially break out to new 52-week high. Now, going back to Smartside, which was the key components of the bull case that we had presented in the Jaguar third quarter outlook, you might want to take notice that this company is reporting very strong quarter, particularly related to Smartside. Let me pull my note over here. Smartside volumes increased by 19% year over year. Here is the Bank of America article that is covering this. Right over here. Smartside's Strand siding volumes were up 19% year over year that were reported this morning. And not only that, Smartside Strand prices were also up 3% year over year. So the company is selling far more of this higher volume business, and on top of it, it is able to maintain pricing power, which was up 3% of the year, though one could argue that this was slightly missed compared to the street forecast of 4% year over year. Nevertheless, this company already pre-announced earnings a couple of weeks ago, which was already better than its street estimates. And then this morning, it's coming out beating that pre-announcement yet again, and the stock is nicely guided higher. So look for a breakout through $31 per resistance, and I believe this thing is going to mid-30s over the course of next couple of weeks or so. That's it from me. Jay.
Morning, Rod. So today, taking a look and previewing a name in the animal health industry, and that would be PETQ. Symbol is PETQ. The company is going to be reporting earnings after the bell on Thursday, November 5th. Now, if you look back at the chart back in August, you will see that the stock gapped down. And this was really because the company poured cold water on the stock when it guided below the street for Q3, when they said they expected sales to be in the range of 160 million to 170 million versus prior street estimates at 206 million. Now, the guidance was largely due to the fact that there was a longer than expected time frame in reopening all of its wellness centers and mobile clinics due to the pandemic. And then PETIQ indicated that it would not be up to normalized operations until the end of September. And then September 8th rolled around and they provided a business update and said they've reopened almost 70% of its wellness centers and 60% of its community clinics. And they did say that 95% of all of this was going to be open by the end of Q3. They also admitted that 27 new wellness centers that were under construction are still expected to go live in Q4. So that's sort of the service side of the business. You then have the product side, the pet medication side. That did well in Q2. Sales were up 35.8%, and that was led by e-commerce up over 50%. They also said that, or they indicated that the accretion from the recent Capstar acquisition would not occur until 2021. And Capstar was an acquisition that they made after buying the over-the-counter flea treatment from Elanco Animal Health. So looking forward to Thursday, Truist was out with a preview note highlighting 3 specific items to keep an eye on. Number 1 is the October trends for the service business, now that the company said that 95% of its clinics are reopened. Truist believes that there was pent-up demand from consumers, so they're going to be interested to see if that translated into higher than normal visits. Secondly, they expect questions around the company's distribution agreements. In early 2018, the company signed exclusive 3-year agreements with 2 large animal health companies. So Truist expects these to be renewed when they expire next spring, but there is a possibility that they could be renewed this fall, which would be a major catalyst for the stock. And then finally, as kind of hinted at earlier, investors are going to be interested to hear on any early read on profitability in 2021 for the Capstar deal that was finally closed.
Interesting update, because the chart is oversold over here. This has been a very important level of support for the past several months. Every single time it has come down here, it has bounced back. Purely technically speaking, just adding to the mix to your fundamental color, I would like to point out that generally speaking, I'm always a buyer of stocks when they're pulling back to important support on light volume. And I generally stay away from anything that is pulling back to an important support on heavy volume. In other words, I do not like to see heavy distribution in a name that is pulling back to support. Pullbacks to support usually provide buying opportunity, but I have to look at volume to see whether there's distribution in it or not. In this case, this entire move down has been on rather anemic volume. It's not like this one over here when the stock sold off sharply on very, very heavy volume. So as long as this continues to hold this $28 support, this is a very low cost entry in my view. But just keep in mind the earnings are coming out in a couple days, so that could be a potential game changer for this one. But based on this fundamental color, hopefully this will turn out to be positive to the upside. But so far has been light volume pullback to an important support level around 28. If it does break down through that, we will likely see 25.30 next, which is way down here on the 10 to 15% to the downside. So just adding to your fundamental color there. All right. Chronicle. Hey, Goldman Sachs is upgrading Pinduoduo this morning. I'm sure you saw that.
I was going to touch on that too.
Yeah, so this stock is guided higher, pretty strong after closing at nearly $91.60 yesterday. This thing is trading at $95.20 in pre-market, which means that's a breakout or almost a breakout to new 52-week high. So here, if I just draw the line, not quite, the clear breakout would basically be if it takes out the $98 resistance. The stock is higher by 5% in pre-market. I'm sure you're excited about that.
Yeah, so if you recall, like back on October 8th, I presented some checks from KeyBank which showed that Pinduoduo has been rapidly stealing usage and market share from its major competitors. I also said that we should expect Pinduoduo's active users to overtake Alibaba's by next year. I'm still sticking with that call. And in this Goldman note that you mentioned, the analyst says that the company's group buying function saw continued strong improvement in purchase frequency and user engagement during Q3. This resulted in total user time spent reaching 531 billion minutes, which is up 101% versus 2019. And now this Goldman note is confirming what KeyBank presented last month. So the analyst here is saying that Pinduoduo has managed to capture 41% of total user time spent across all e-commerce platforms in China. Now this is versus 34% a quarter ago and 29% a year ago. That's incredible. So that's the first stock I wanted to cover today.
Just to Jag client. So if you open today's first read, you will see the summary of that Goldman Sachs note right here on first read, in which this upgrade note is coming from, and they are basically going from neutral to buy and raising the price target all the way to on $123 per share. I wonder if this is the street high, but I'm not sure exactly. We have to check on this. But a very positive note from Goldman. And also, I would like to point out for those who never saw the video, if you go to Jaguar Media, all the way back, this was the very first Chinese, tech demystified. This was the very first episode under that series that we published on Pinduoduo, laying out the bull case on July 27th, and a full presentation slide as well as research note is attached here. So take a look at it. Lots and lots of positive things were covered. And so this is now a setup for a breakout. I think it's only a matter of time with this Goldman note out today that this thing is going to take out all of this $98 resistance. Basically, it's going to triple digits soon, in my view. So 91 closed yesterday. I think we're going to see triple digits soon. Good stuff.
So the second one I wanted to touch on is Enlight, symbol LASR. I already laid out the bull case exactly a week ago, so we can go back and watch the October 27th conversation if anyone needs a refresher. But just a reminder this morning, a quick one, that the company is going to report in a couple days on Thursday after the close. And to refresh on technicals, this stock has been in accumulation for 6 months now, and so if and when it manages to break out of this range, I suspect it's going to be very explosive. I'm bullish the stock over the next couple of quarters, but that said, there's also a chance I might be wrong and the stock ends up exploding to the downside. And so the way I'm playing this in my account is I've been accumulating common, but I'm also protecting myself with $20 strike puts. So I did consider buying calls rather than common, but the problem is that the options market for this stock isn't very liquid because it's a small cap. So this is the other stock that I think could present an opportunity this week. Fahad, if you were to recommend a trade structure for listeners, what would you recommend here?
So first of all, I think I like the idea of buying married put. That's what essentially what you're doing: long stock and then long, pretty much right at the money puts or slightly out of the money puts, just as a hedge, which makes sense technically too, because this $20 has been an important support level for the stock. If you look at it, it's been consolidating above that, so naturally nobody wants to see a breakdown below this. So that's the first thing. So I'm okay with just the way that you're doing it for yourself. Secondly, I would just like to point out that this should be beneficiary of improving manufacturing PMIs globally. One of the things that we noticed yesterday in the market, and once again, I keep using this term: buy America, build America, buy America, build America. And I think I've used this like dozens of times in the chat room and webinar and trade ideas for last 2 months. Why? Because everybody wants to come every single day and they want to talk about Apple and Google and Microsoft and Facebook and Twitter and all of this, when the real important and real strength in the market is in machinery, infrastructure, construction, manufacturing, all of those hardcore basic building stocks of the economy. And that's what we saw yesterday as well, when the NASDAQ was basically fading the entire time. But we had very strong PMI manufacturing report that came out over the weekend from Europe and Asia, and then continued that momentum in the United States. And XLI was powering higher. XLI was one of the best industrial sector, was one of the best performing sectors yesterday, and you saw that move carried through to a lot of these names: Caterpillar, United Rental, Honeywell, and so on and so on. I think all of these, the entire basket is basically running. Entire basket is running, and I think that plays positively for Enlight as well. And so just purely based on the macro theme improving around this company, I would expect this quarter to be actually strong when they report earnings, aside from the specific sharp focus view that you provided in the conversations 2 weeks ago in the video. So I like your trade the way you're going, and just go along with that, and I would expect a breakout in this name.
Sounds good. So lastly, just wanted to make a special mention to Construction Partners, symbol ROAD. So if you remember, I laid out the fundamental bull case back on September 18th, and then I said to wait for a pullback to close to 17 and then go long. Fahad, look what's happened since. I think it's up like 25% from the entry. But
Yeah.
Actually, Construction Partners is, I'm just bringing this up because this stock is up a lot since I made the call, and then recently some commentary coming out of the North Carolina Department of Transportation that they're pulling forward their budgeting and not budgeting but bidding process. So that's encouraging piece of news as well. So I just wanted to give myself a pat, I guess, with this, because in this
No, I
business, you
think,
just
look, I'll be honest with you. I give myself a pat all the time, and I'm right. Why not? Why the hell not? You know, as I jokingly told one of the clients previously that I basically use Twitter for bragging rights. You know, why not? If you're right, you should talk about it. You know, I mean, a winner is a winner. Absolutely. So there's no shame in that at all. Now, I have to give you kudos for basically bringing this up, because once again, this was discussed by Chronicle on September 18th. And right over here, and this too is a Buy America, Build America stock. This company is one of the largest producers of asphalt, and basically it depends on a lot of the construction support and the total manufacturing PMIs improving, as well as the construction environment improving, to basically benefit from. And this was all discussed in the conversations video on September 18th. Now, have to mention technically over here, basically what this formation is, this is a large cup and handle formation. So this is a large cup, and then this is a handle. And this is running strong with the same theme of Buy America, Build America stocks, the industrial, the infrastructure, and so on. I expect a breakout through $22 resistance, basically this cup and handle breakout, and that should carry the stock to about 24. So from here, I'm still expecting another 10% to the upside in the short term. And now also depends on what happens in the elections today, which depending on which way it goes, that could also affect the some of these theme stocks in short term. But overall, very strong, powerful trend, and expect this to break out and go to $24 per share. Great stuff as usual, guys. Lots of coverage today. I like that. And that's it from us. We'll see you in the chat room shortly.